By far the craziest investments. Like, you want to talk about mental fortitude on a level that's unimaginable? They bought Nvidia in 2017 and they've been holding strong, baby. Today, my fellow Canadians, you are now looking at the most important CEO on the freaking planet if you are a Canadian citizen, and his name is John Graham, because he is managing the Canadian pension plan, which you, I, and 21 other million Canadians are contributing to. So even if we blow up our retirement accounts, we're still gonna get a lovely passive income check from the government at the ripe old age of 60. And I wanna break down some of the factors behind the Canadian pension plan, including some of the pivotal changes that are going on, and then break down the actual investments to see how they've been managing this. And I promise you, it's gonna blow your mind. Not only the stocks, but private equity and real estate the pension plan is investing in, because today, baby, it is worth over $500 billion. Now, if you want to have a financial healthy retirement, consider hitting that like button and subscribing for those future financial videos. But getting right into this, for those of you that are oblivious to what the Canadian pension plan is, basically when you make money at a job, if you're self-employed, you're going to have to pay into it on your taxes. But the government just says, hey, we're going to take a percentage of your check tax-free. Your employer's going to match a small percentage of it, at which we're going to manage it and invest it as your fiduciary to basically ensure you're not playing with the bar of soap too much and dwindling your future retirement away. And I got to applaud them. They've done a fairly good job at this. And once you reach the ripe old age of 60, you can start drawing those beautiful checks, baby. Or if you wait till 65, they give you a little cherry on top of the cake. They increase, a couple more percentage points. And you can even wait till 70 if you don't want it at that point, because there are some tax implications that do come into play with receiving the Canadian pension plan and working. Trust me, my dad's kind of going through it. It's a very technical mess. Now, they just increased this thing called the pension plan enhancement, which basically they're just increasing how much we're going to be contributing. And this is probably a good thing, because inflation's been so out of control. They recognize that, yeah, I know you're going to be losing more of your paycheck up front, but for those of you not investing, this is a wonderful thing. I mean, this is really, really healthy, and I think it's going to benefit most Canadians greatly, especially us younger ones that want to ensure this money's there for our future, because the boomers are going to start drawing against it here. And this gets very technical. A lot of YouTubers have broken it down, but just reading a quick highlight, the rate for employers will be about 5.95%, and that for employees will be about 11.9%. The rates of all these who are self-employed will not change at all. There will be an additional 4% benefit to the employers and the employees. The yearly maximum benefit will be up to $68,500, and the OAS clawback amount will go from CAD 86,912 to 90,997. And I know these are a lot of complicated technical words, but you don't have to overthink this too much. They're just basically saying that, hey, back in the day, once you reached, an income of 66,600, they would stop taking money off your check to put towards CPP, but now they're increasing that to 68,500. And there's a few other technical details that I promise you other YouTubers are going to do a much better job of breaking down. Go watch those videos. But what I'm here for is to tell you what they're investing in, to make sure it's sustainable, it's reliable, it's going to even be here when you get to your retirement. And unless a global financial war of nuclear, Armageddon breaks out, you're going to be just fine. Calm down. In fact, you could probably base some of these investment styles into your own personal investing, because again, they're managing $576 billion and they've seen a pretty healthy 9.6% 10-year annualized net return. In fact, that's damn near up there with the S&P 500. I think the S&P is doing slightly better. I don't know if this is before or after inflation. If it's after inflation, it's doing better than the S&P. If it's before inflation, it's not doing that much better. I think the S&P is at like 11% or something like that. But nonetheless, take a look at these assets, these investments, because if we scroll down here, we're going to first and foremost, actually, what I need to do is point out the funds. Let's go down, because basically they have active equities, they have capital market and factor investing, credit investments, which we're not really going to look at, private equity, and then real assets. So we're going to talk about real estate, and then holdings and relationships. I'm going to focus on about 3 aspects of this fund, which more or less relate to stocks and things that you might be more familiar with. But taking a look at the real assets, which I find very intriguing here, they have sustainable energy across the entire globe. They've been investing billions of dollars into a lot of basically like renewable projects. They even have Enbridge in here. If you take a look at these real assets, they've invested $2.25 billion. So, when you go into Yahoo Finance and you kind of just look up the statistics, and all of a sudden you scroll down and it says institutional ownership, the Canadian pension plan is going to be a big institutional mover for a lot of these companies. But it's nice to know But they have a massive investment kind of in this, and they've also been helping with some of these offshore European wind projects through Enbridge, which is a 50-50 joint venture. Like, they're directly working with some of these conglomerates within the Canadian economy. Now, there's so many other ones that I've never heard of in my life, but they are huge investments that dwindle all the way down from a couple $100 million to a couple billion. But if you take a look, there's infrastructure, also very intriguing here. Again, nothing that I've ever seen other than the 407, which is fascinating because most people think the government sold the 407 to Spain and that we don't have any ownership in it anymore. But the fact is apparently the pension plan has a 50% stake in it that's worth $7.1 billion. And let's be real, for how much it costs to drive on the 407, at least think that you're paying it into your retirement. I mean, it's nice to know that insane bill they charge you for driving on that thing is going to people's retirement. But again, there's tons of other, all the way from Brazil to Spain, like Mexico, just endless infrastructure going on across the globe. Well, let's take a look at real estate because they own some of the most premier real estate from the UK to Australia, the United States, Japan, Hong Kong, India, China. Like, they are so globally diversified. Like, you only wish you were controlling a fund like this on a private level. Like, you know how insane this is? I mean, again, the entire economy on a global scale would have to collapse. So that's kind of more of the real asset side of it. By far the craziest investments. Like, you want to talk about mental fortitude on a level that's unimaginable. They bought Nvidia in 2017 and they've been holding strong, baby. You talk about Google, MasterCard. They bought MasterCard in 2015 and Google in 2013. It's like, this is where the rate of return's coming from. Like, my God, Buffett hasn't even made these kind of investments. And yet the Canadian pension plan has been doing, look at United Health Group. I mean, I don't know what WSP Global is. That one I've never really heard of, but they got a $606 million investment, a Montreal-based company. And from the private equity side, like, this is even also intriguing because these are companies that aren't even publicly traded. They got the 99-cent only store, similar to Dollarama, I'm sure, and then like a bajillion other private investments that they've been holding for years. They got growth equity in here, 10x Future Technologies, Aurora Innovations, things I'm not as familiar with. You got private equity funds, so companies that just invest in private equities. Like, the amount of diversity within this is just absolutely staggering. So let's talk about fiscal 2024. Let's see the performance because God knows it has been flat. They are seeing gains, but they are basically null. So you can see the fund recorded a net return of 0.1%, which is what most people are experiencing in the markets. Let's be real. There's very far and few between people that are crushing it unless they purely own tech and they really bought heavy when it dipped. So the real rate of return this year has been a bit abysmal at best. But again, the long rate of return has been very healthy, and it's likely, in my opinion, that it's going to stay healthy because it's just so damn diversified. And taking a look at that diversity, we can see that the asset class composition breaks down 9% infrastructure, 9% real estate, credit cards at 13%, fixed income at 12%, private equities 33%, and public equities 24%. And just going a little bit deeper, as it stands with that $570 billion as of 2023, you can kind of see the full breakdown based on all these different assets. It looks like the biggest one sitting at 33% is actually within the private equity markets, if I'm looking at that correctly, which is pretty incredible. And real estate isn't nearly as big as I thought it would be, but sitting at around 9%. Public equity is sitting at about 24%. So most of the investments actually aren't affected by the public markets because they're private, right? But I'll leave the link to the Canadian pension plan investments in the description below. And as somebody that wants to reach FIRE earlier, financial independence, retire early, this is a fascinating thing to consider, that if I can retire by 35 or 40, be able to function off that until 60, then I can start drawing even extra income that can push me through the rest of my retirement. It's all fun calculations, but be glad you live in Canada. We get a lot of cool benefits, but let me know what you think in that comment section below.